in a better situation, because these big sell-offs on gold, I mean, gold has trained everybody. We've all seen this for the last, year, to just go up and up and up and up, and it never goes down.
Yeah.
You very well could see this flush take out, a bigger than usual pullback. And we'll have to see. I don't currently have the readings that I need to get long gold. I don't see, if we see the economy start to sour more, Ivan, then I'm more interested. But right now I see the inflation side risks and an economy that is not in shambles. So those two dynamics keep me very much on the sidelines of gold. If we start breaking support levels, we could start to see a short-term, kind of downtrend form on gold. But we'll see. It depends what happens with the dollar. It looks really strong here above 104.5. Let's see how the price closes here today. Ivan, we're getting kicked off here. It's our next guest's turn. Let me just mention to everybody here watching, if you guys enjoyed the commentary from Ivan, he has his own YouTube channel. He also does one-on-one coaching. If that's something that you're interested in, you can find his social media here. We'll drop the link in the chat to check out Ivan FX on YouTube. You can also check his descriptions, check his homepage, get in contact with him. You can find him in our Discord channel if you're a Discord member. Send him a message. He does one-on-one coaching if that is something that you're interested in and trying to improve your trading. So, Ivan, thank you very much for coming on the show today, man. It was great talk.
Thank you very much for having me.
All right. See you, Ivan. Okay, guys. Yes, we got Chris Pulver taking over the show, guys. Chris Pulver is a regular stream contributor and one of our hosts here on the A1 Trading Show each day. He trades a bit of everything. We're going to be taking a look with him at indices, commodities, currencies, and no shortage of things to talk about today with the election. I'm going to pass the stream over to him. I got to jump on a podcast here in just a few minutes. And in the meantime, last thing I'll mention before the quick break, don't forget, we're doing our Black Friday sale. And speaking of Black Friday, you guys can get access to the Pulver alerts for 45% off using the link being dropped here in the chat. Just speak to a member of our support team. We'll be happy to set you guys up with access to a membership. You can get access to Chris's trades. You can see my trades as well. All of that is currently on super sale. It is our biggest discount of the year. Okay, stay tuned, guys. Chris Pulver's taking over the show just after this. Check it out.
Where are we going again?
I thought you plugged it into the GPS.
Oh my gosh, what is that? What's happening?
Relax, it was a Pulver alert.
A Pulver alert?
Yeah, you know, Chris Pulver. He teamed up with A1 Trading, and now you can see all of his trades, and it's all through Discord, so I can easily check them anytime on my phone or desktop. Plus, you can get notifications when new messages are sent.
Frank, that's really cool that you can see his signals, but why are you doing that when we're space traveling?
Because I'm bored and we have light years till our next destination.
Another trade already?
Actually, have no idea what that is. We might be in trouble.
Pulver alerts are now available on the A1 Trading website, and for a limited time, you can get them 40% off for the Black Friday sale event. Don't miss out on getting Pulver alerts for the best price anywhere in the galaxy. We're dropping the link to get Pulver alerts 40% off right now in the chat and the description down below.
Nick, Frank, you watching gold?
Roger that, Pulver. We got the alert.
Hey, everybody. Happy post-election. Happy Wednesday. Pretty wild stuff, yeah? So big gaps to the upside on the S&P. We gapped up almost 2%, like 1.6 on the Nasdaq, 2% or so on the Dow, and about 6% on the Russell. So as soon as we had opening bell, I spent most of my morning closing out positions on IWM. I'm gonna have to go through the Pulver alert section and close out some winners. Basically, all my profit targets that I had. So I had a bunch of trades on SPY, a bunch of trades on Qs. It was a combination of credit spreads and debit spreads, and I had 10 for 10 winners. There's still a couple out there, but basically I've just been stacking in some orders consistently. I had a nice chunk of winners that the broker took care of everything. I just set my profit target on the Russell or the IWM. This actually was a pretty good chunk right here. So P&L, fresh highs in the portfolio today, which is pretty nice. I went to the IWM, checked out all my positions. I still have some shares of the IWM. They're covered at 225. That'll be out to the end of the year. But on the overall position on the IWM, around $24,805 of profit, and I protected most of that today. So I still have some shares, and they're covered, but you can see all these things are zeroed out. I zeroed out a lot of my trades for profit. So I had trades that 40 cents credit, and I closed it out for 5 cents debit. I had some ratio spreads. I had some other trades, dollar credit, closed it out for 20 cents debit. So anywhere between like 80, 85, 90% of the max profit, I just went ahead and closed it today. The one that I'm probably the most happy with is it was a bull call combo. So I did basically an out of the money spread where I bought the 240. I bought the 240 call, I bought the 245 call, and I sold the 270 against that. Now I paid around let me see what I paid on my spreadsheet. I think I paid like $6 or $7 for it. Let me find it here. Let's see here. I paid $7.50 and I closed it out today for about 13 bucks. So let's see. So $13 minus the 750. 13 minus 750. So that's a 73% return on capital on the IWM. Those trades are done and over with and closed, and I don't need price to go up above 240 or 245 or go to the moon. I turned, a 750 debit into a $13 credit. So pretty happy with that overall. And yeah, I mean, we're had this huge run on the IWM, right back up near, not to them, not quite there, but right back up near the all-time highs. So I do have to wonder, is this capable of running higher, or are we coming all the way back to these levels and say, okay, there's a monster gap now, and if we end up hitting this high and then fading there, something wouldn't surprise me to see this thing going, back down for a gap fill. So just saying, we'll see what happens, but that is a big move right in there. I mean, 5+% from yesterday's close to today's current price. We opened slightly higher, so we're still showing a red candle just barely on the day, but we gapped up like 5.6%. So SPY big gap higher to all-time highs. Nasdaq is coming within the all-time highs, and the Dow also gapped higher to all-time highs. So obviously, I'm as curious as anybody. Is there more to this? Is this a gap in a just a big island here that just hangs out and then more upside, or is this a gap higher and the Trump trade is essentially put in and priced in right away, and then the rest of it is like, well, not so good? I don't know. I don't think it is a bad thing for the market to price in maybe some type of optimism, but to do it all in one day, I'm as curious as everybody else to see how this plays out. So I do have a couple of inexpensive trades running for the day. I've got a butterfly spread on the SPY at 585. That's my pin price. So I put that into the Pulver alerts as well. If price comes back down to 585, I'm going to set a chart alarm here. 585. If that level gets hit today, I put in a 15-cent debit. I'm trying to close it out for $1. If I get it, great. If I don't, no big deal. But overall, no complaints. It was just a very active management day right away from the first, hour of trading. And I'll let price continue to do its thing. So I do have shares of Intel, looking to get it called away in 2 or 3 weeks at $24. China did not have a great night. So if I take a look at my China positions, overall HSI still in this sideways chop. Alibaba gapped lower, but it is coming back up. So that's at least a little reassuring. Baidu, same thing, gapped lower, starting to fill the gap. FXI, KWeb. So at least they're showing green on the day. JD came down to 37, and we're back up to 38.79. I'm trying to get this called away at 40 bucks. OXY was trading in the 50s. Now it's a 51.57. I've got a covered call for this Friday at $53. So if there's a way that OXI can rip a little bit higher, needs to go up another $1.44. And if it can get up there, here is my position. So have some shares. It's the 500 share one that I'm trying to get called away at 53. So I have a long put that was out for protection out to next Friday. I've got the $53 covered call for this Friday. If we can get an additional rally up here by another $1.42, possibly that gets called away. Pfizer's another one that I'll be watching. JD's another one I'll be watching. So when those sell calls expire, either they get called away or they don't, and I'll just keep working the cost basis lower. But all in all, pretty good. I mean, it was a kind of a wild night. I think it wasn't as dramatic as I thought it was going to be. So I mean, here's the results: 277 to 224. When I went to sleep last night, I think Trump was sitting in the 260s. So it wasn't quite determined, but from what I saw this morning, it looks like Wisconsin was officially in, giving him the win, and 10 electoral votes at stake, and I think that put him over the edge. So some are still, in the works, but crossing that 270 mark is all it takes. So we'll see. I guess all that's left is there has to be a concession speech and a victory speech, and maybe that's it. So, like I said, smooth transition of power would be a good thing. Hopefully not a bunch of drama there. But that's it. We've got a lot of good trades running. If you've been long in any capacity, things are looking pretty darn good. Gaps higher, great. The Russell's caught up in a big way. Let's just talk performance for a moment. So go to Russell and take a look at the start of the year. Okay, I think this just catapulted the Russell up into some territory now where it's looking a lot more attractive from the open of the year. So we started out on the Russell, underperforming, not at all-time highs, and this would have been, looks like right in here would be the start of the week. So from that open, we had about a 6% drawdown in the IWM, but we got all the way back up here. Now it's up to 18.6% or so, 18.5%. So you got your S&P up over 20%. You have your Nasdaq over 20%. You got the Russell now that's played catch up in a big way, up over 18% now. Is it possible to go higher? Of course. It can get up there into the 20s as well. The Dow, right up there in the high teens. So index is doing pretty well. Bitcoin poked all-time highs last night. Gold is dropping like crazy, as is silver. So I saw Alvin and Nick talking about it earlier. But look, I mean, gold pulling back is excellent. Okay. I look at it this way. I'm not trying to catch a falling knife. The dollar's had a big move to the upside. If I go to my typical dollar, look, I think that the dollar gets faded, but I'm not calling this top. That'd be insane. So I look at it this way. We have major resistance. If this is a big pop in the dollar and it pauses, okay, does it break and refill? Or does it continue to go higher? Look, I'm still interested in shorting the dollar, 106.50 to 107.00 if we start to see some indecision at these previous resistance levels. So you look left on the chart, go back to these previous highs back in 2022, again in 2023, slightly lower highs in May of 2024. I mean, one thing that's pretty easy to see about this daily candle so far is that that's not a usual daily candle. That's a huge move on the dollar. And this is why I said I don't want to take any dollar positions. Okay, so right there, having some noise, it was not the spot to call the top on the dollar. So if this is a squeeze where, all these traders that are trying to short the dollar get squeezed out, and then it ends up forming, the topping pattern is right here. If we have this low and this market fades it all the way back down, then I'm looking at a topping pattern. So we could have a crown or head and shoulders pattern forming on the dollar. It's just starting to form. If it goes up and pauses and goes up more and pauses, that's fine. Draw an aggressive trend line like that. Wait for price to get sideways and then sell it over here with a stop loss higher and have a big reward to risk to the downside. So I still think the dollar will offer up good trades. More trades closing for profit on the Qs. Good. So I need to update this. This is now 17 for 17 on waterfall. Nice. So I had a whole stack of trades, like I said, first thing this morning. I had a whole stack of trades on the SPY and the QQQs that all hit my profit targets this morning. I was actually in a live session, and I don't think anybody could hear my alerts, but they were going off like crazy. So anyway, it's not a bad thing. Profit targets are good. Okay, so dollar is up, but I'll be watching the dollar. Gold, you know, we finally had a decent pullback and a meaningful pullback. This does not mean that I'm just jumping right into gold. You know, we've had a 4 to 5% correction. Okay, so I mean, look, gold has been up about 54%. So even from this perspective, let's take a look at the weekly chart on gold. Okay, even if this is the bigger swing from low to high, right there. So, and I know that I might be getting picky here, but gold has been such a good bull market this entire year that the first sign of going lower does not mean that I'm just going to jump right in and start buying it. You know, I mean, I'll use something very simple. Right here is a 23% Fibonacci from this latest swing, starting back here at the October 2023 lows. Okay, so if I just take that bigger swing and we get a 23 to 30 to 38% pullback zone, also trend line support, also 200 moving average, also, right? I mean, there's good technical levels back down around 2550 to 2500. Fine. So I'll wait. You know, and if gold, if this is it, like there's a little pullback, it hits the 50 period and then goes higher, that's fine. But just in case, right? Just in case this is going to be high, low, lower high, lower low, lower high, lower low. Oh, fine. Find some support, find some good structure, and then off we go. So I think this is fine to just wait. I'm going to wait, right? And if I'm wrong and I had to buy it here at the 50 period, that's on me. But if this is the start of turning over where the dollar has made a strong move, gold is clearly going the opposite way. Silver's doing the same thing. I mean, I'm just going to be patient. A lot of my trades on silver and gold are still credit spreads. I still own GLD and SLV. I'm just going to wait. Okay. So on that note, let me actually check my covered calls on SLV. Let's see here. SLV. So I have some shares covered at 35. Pulled that for 48 cents. What's that trade for right now? Okay. So I could. I mean, it's not taking a bunch of profit there. I'm just saying if I get rid of it, 48 cents trade down to 15 cents. I could take some of that profit. The rest is, it was a pretty wide credit spread. So a 23 by 15. And right now that is up about $80. Did I trade for that? It's 21 cents. Interesting. So 21 cents times 500, $105 max profit. It's up about $80 right now. So I've got most of the profit on that trade, but I think I'll just let that do its thing. Okay. So anyway, I want to see if silver is going to be well supported in my moving average cluster. Here's the 21, here's the 50, here's the 100, here's the 144. If we pull back into that area, okay, pull back in this area, look to see if we get a close above. I'll probably establish some new positions and see if we get higher on silver. Gold will be the same type of thing. If gold drops into, let's say, the 50 period or the 100 period, the one way to look at this on a daily time frame would be this. If we have a daily candle down here, and then we get a green candle. Let me color this green. So let's say we have red, red, and then green. Okay. Well, if we get a green candle to close back above one of these moving averages, that's not a bad spot to get long, and then see if we can get back to these highs. And so reward to risk is favorable. You can still be a trend trader and a trend follower. But if this is going to be a bit of a falling knife, I'm not trying to do anything silly on that, right? So anyway, that's my thoughts. Silver, be patient. Same thing on the 200 EMA. Bitcoin, 74. We're up to some fresh all-time highs. Is Ethereum following? Kind of. Ethereum, I'd love to see Ethereum, break this trend line, get back above 28.15. MicroStrategy, big gap to the upside, still fading that move today. FBTC, IBIT, another big gap to the upside. So there, I mean, gaps up about 6 to 7% to some fresh all-time highs. Looks very similar to Bitcoin. BITO gapping higher as well. So, I mean, I'm sure this is begging the question, are we seeing new highs? Is this going to start to see this? You know, November is usually and historically a really good time for Bitcoin. Q4 performance has been pretty bullish. November has been one of the best, the best and bullish months in Bitcoin's history. So you got to wonder if we have this presidential election catalyst out of the way. Now we have the Fed. I mean, is it something that just gets into open territory? Hope so. If it is, I mean, it's wide open above these highs. So I've got symmetry measured out to over 100K, about 108. And I mean, I'll adjust this second measurement too, but I mean, a run to 100,000 plus would be pretty exciting. Anything on the currency side? So overnight, dollar's been strong. It started at 7 p.m. last night, stayed there all night. Euro's down, Japanese yen is down, Swiss is down, pound down, CAD, New Zealand, and Aussie right at baseline. Dollar just strong. So I like looking for dollar resistance. Just look back the last couple of years and find those levels. I'm looking for a nice, obvious price pattern. Okay. All right. Anything in Germany? So the DAX is down. FTSE is down. China, like I said, was down a little bit. How about our Mag 7? Apple up. Amazon is some fresh highs. Let me see here. My Amazon trade positions. I think I've got an Amazon covered call at 210 or 215. 210 covered call on Amazon. What to do? Alcoa's back up as well. So Amazon just hit some fresh all-time highs. That's good. All right, that trade's done. That was a profit that we had in the Pulver alerts. 210 covered call. I'm just going to let it do its thing. I mean, this covered call for me is out to December. I could roll it. Let me see what it's going to trade for. Maybe I could roll it. So I have a Amazon trade. I have a December 20th. December 20th, 210. So the trade price was around 555. That's what it's showing right now. I'm up about $1,700 on that covered call. If I wanted to roll that out, just curious what that would look like if I went out farther in time, maybe even up in price. I'd have to mess around with it. Let me see if I can maybe consider a roll here. Symbol lookup, options chain. All right, so it looks pretty clean. So all the Bitcoin stuff going pretty well. Yeah, I mean, got no complaints. I got one of my accounts up almost 59%. Other accounts are all up, 28 to 32%. Election's doing the right thing, in my opinion. So now we got the Fed on Thursday. With the gaps higher, I mean, we're unlikely filling the gap today. I do wonder with the Fed. I don't think the Fed is going to try to disappoint. The one thing I am concerned about, I mentioned this in an earlier session today. The one thing I'm actually concerned about is this 10-year yield. Okay. This 10-year yield is not a good thing. This 10-year yield going from 3.6 to 4.45. That's an 86 basis point move in the last month and a half. Now, what does that mean? That means that at least, let's say 0.86, okay? That means that roughly your car loan has now gone up by 0.86%. Your mortgage if you're trying to buy a house, has probably gone up by 0.86%. Restructuring any type of debt, any type of corporate financing has gone up by probably 0.86% or higher, because obviously your lenders are going to take their little cushion and margin on top of that. So I say that because this is something that the Fed has to be paying attention to. The equities market will not continue to make all-time highs if this thing is up here towards 5%. We are going to see a top in the equities market like no other. And if it goes higher than that, then brace for a freaking correction. Okay. So the next thing I'm watching is if this ends up falling, that's good. If this keeps going higher, that's not good. So the more aggressive this gets, I think that the all-time highs on these indexes are on borrow time. I really do. So I'm just saying, be mindful of this. The Fed has to be paying attention to this because everything that is kind of, pegged to the 10-year yield, this is the complete opposite price action that I'm sure the Fed wanted to see. Because the bond market is saying, hey, you want us to hold your debt? Pay us more premium. That's what that is. And for this thing to go up nearly 1% in the last month and a half, that's not good. Like, this will continue to make everything tougher on the consumer, everything tougher on restructuring debt, any type of financing terms. It's not good. So this is probably the biggest threat to all-time highs right now that I see. So if I'm paying attention to it, and it's not something I'm trading technically, because to me this is weird, right? Like, if we keep going higher, then this is the Fed ultimately going to experience something like it's breaking. The Fed is going to break something, or the market is going to force its hand, where the bond market's going to do something that breaks the equities market, and then all of a sudden we're going to backpedal into cutting rates aggressively, and then inflation's a problem. So I wouldn't say that we have this super clear sunny path ahead if we see the 10-year continue to go higher. So just pay attention to it. That's all I'm saying. Going into JNK for credit spreads, AAA, BBB, CCC. So far, things are still pretty tight, which is good. What other news do we have this week? We just have the Fed tomorrow. I think we have U of M consumer confidence on Friday. That is about it, in my opinion, I think. That's what we show. So low impact today, post-election, tomorrow, Fed and Bank of England. Bank of England looking to cut rates by 25 basis points. Fed looking to cut rates by 25 basis points. Everything else is low impact. And then Friday, CAD job numbers with U of M consumer sentiment and inflation expectations. I love how there's not a forecast here. I am curious if there is a forecast or what the actual is on Friday, if this is still aimed to go higher. So this was a revision from 2.9 down to 2.7. So that's fine. But I'm wondering what the forecast or what the reality is. So let's see this trend. 3.5, 3.3, 2.9, 2.9, 2.7, 2.9, which was revised down to 2.7. So I wonder, like, based on this, is this going to start showing trends lower? If we go to Trueflation, I'm curious what that looks like on Trueflation. I mean, this has still been ripping higher. This low, this high. I mean, this is a 1.5% increase, almost 1.6%. 1.6% increase in inflation measurements. It's crazy. Let me see. Can I go back further? Max. So, I mean, I get it. Like, when we were at 9% on the CPI, that we're, this Trueflation measure was around 11%, but it's accurate, right? I mean, the numbers are a little bit different with how they calculate theirs. But when we had our peak in CPI, this thing had a peak. That's why I was saying for the last several weeks now, a low on this measurement and going higher. I don't know if you saw this, but the Fed forecast for this next round of CPI is forecasted for a 2.6%, between 2.6 and 2.7. Okay, which from a 2.4, that's not the right trend, right? That's showing inflation is no longer, trending lower towards 2%, but rather going up. Okay. Trading, do you think with the cut, see dollar weakness? I don't know. I don't know. And I say that because other central banks are doing the same thing. So it's not just like the dollar's cutting and nobody else is cutting. I mean, the Fed would be cutting along with everyone else. ECB is cutting, Bank of England's cutting, RBNZ's been cutting, BOC's been cutting, right? So I just wonder, I mean, would I see immediate dollar weakness? I don't know. I mean, we had this huge candle from today, and if there's a big inefficiency, and there's really not. I mean, the daily candle looks like it, but if you go to a 15-minute time frame, the one thing I see on the dollar right here is a gap. So, I mean, if you've got the small trade size in the capital here, if you were to short the dollar and try to get back into this gap fill, more than likely that is going to fill. I would think more than likely that gap gets filled. Now, does that go higher and higher and higher and higher first, and then this structure ends up rolling over, then it fills the gap? So that's what I'm saying. Like, could the FOMC fill it tomorrow? Yeah, maybe. You know, but I would just wait, because it doesn't mean that the dollar all of a sudden has to get weaker when all the other currency pairs and central banks are doing the same thing. They're all cutting rates, right? We're all cutting rates. Okay. Let me look at a trade right now on SPX. I'm going to take a look here. If I flip this around, those are calls. So 53.90 there. And that's a 10 delta. Let's go 10 delta. Okay, I'm going to take a trade right now for $1.90 on this thing. $1.85. Okay, just got filled for $1.85 on SPX. That is a 30 and 50. So 30, 50, and a 40 and a 20. Okay. Shoot. I'm going to set a stop loss and a take profit. Okay, and see if I can sneak in about a 20% gain. There. Okay, so I'm going to add this in. So 5930, 5950, 5840, $90, $85. Okay, let me find my profit target. Okay, today's date, and trading around 58.85. All right, so it's going to go after a little range trade on the SPX. Qs had 1, 2, couple trades for profit on the Qs. All the other profits are already set, so let's see if those continue to do their thing. The equal weighted Qs that I bought in on the Pulver alerts, up a little bit on that one. PayPal back up towards 80 bucks. Pfizer at 27. MicroStrategy is fine. Microsoft, MARA, sitting right in the middle. I have a bull call spread at 19 by 21. Paid less than 70 cents for that, really? Paid 70 cents to make $1.20. $1.30 almost. That's not bad. All right, anyway. So we'll see what happens. So dollar index, a big rip on the upside. Keep an eye on the smaller time frames. The 1 hour chart does have a gap here. FOMC is tomorrow, 2 p.m., 2:30 press conference with Powell. Could we fill the gap? I think this dollar move realistically was a squeeze. I've been talking about this the last couple of weeks. I didn't like the positions of the dollar. It didn't feel like the dollar was ready to be done, going up. And I just thought with the election and FOMC combination that I didn't want to force any trades on the dollar. So to me, this looks like a squeeze to flush out those short sellers that either squeezes them out and then tops to go back down. So the way I'm looking at the dollar as a whole would be this. If we go up here, smaller time frame, come back in and fill the gap, this possibly sets up a head and shoulders pattern that ends up heading back down. Now, what does this take? Well, that might take months, right? I mean, if the dollar is going to show some true resistance and true tops, it could take months to get back down to these lows again. And at the same time, this squeeze, if we just pull back to past resistance, could also offer a bit more upside, and then we get a little bit more resistance up here around that 106 to 107 area. Then just wait for the trend line to break, right? Just wait for the trend line to break. So all I'm saying is don't force trades. Okay, gold and silver, same thing. Don't force trades. That's a big drop on gold for the first time in a while. You can look back, you can look at months of trading here, and there has not been a candle that large since probably May. And so that one candle, does that have more to go? It's possible, right? Look at this May situation. We went, down aggressively, went a little bit lower, down aggressively, a little bit lower. So this one candle, we could probably stay there, go a little bit lower, find some better structure and support, and then gold looks good with some confirmation to then get long. I would keep the stop loss relatively tight, try to get back to highs again. If it offers up a good reward to risk, then, interested in the trade. Okay. All right. So that's where we're at. Bitcoin, 74 and change, all-time highs. We came up close. We poked officially through them. Bitcoin with November spirits, possibly get into all-time highs yet again and running into some open space. I would say technically Bitcoin does look pretty promising. The fact that we had this big wave up and all this time accumulating, to me, if this is going to break and go higher, this is open space. So if it gets there and stays in open space, that momentum can make a nice little rip. We can officially hit that $100,000 mark. Okay, does that mean it's going to happen? Of course I can't say that. But if we have resistance here and support here, worst case scenario is we come all the way back down to find support. I'd still buy it. But if we're back up these highs and there's more momentum, there's lots of trades in here. Lots of trades. So, dollar cost averaging in IBIT, FBTC, BITO, even MicroStrategy, just adding to Bitcoin is fine. But it will be interesting to see if we have open space. Okay, Pound New Zealand. I'll take a look at that one. I don't really have a bias in this one. I would look at equal highs. If we have resistance here and support here, it just keeps grinding, right? So is this, just chop suey where it's just lots of this, lots of this, lots of this? Eventually that structure breaks. Maybe it's a rising wedge that starts to fade. So I would look at Pound New Zealand as an opportunity. If we can sell it high over here with some good confirmation, that to me is the setup. We're looking to sell high, take it all the way back down towards recent support. That would be a big range to trade. From 219 down to 210, that's a 900 pip range. But to me, that looks like that's what I see. So resistance around that 2.19 handle. If you get some good confirmation, I don't know. I try to sell this thing at like 218.50 to 219. Okay. All right. What brokerage? I've got Schwab. I've got Schwab.com as Thinkorswim platform. I use the web and the desktop. I got Tasty Trade. Tasty FX is my Forex broker. Dollar CAD. Yep. See, did my dollar CAD start getting me filled on anything? Not yet. This is why I want to put those buy orders up above 4,000. So, you know, it's a big move on the dollar, but is it breaking these highs yet? Not yet. So if we start getting these trades stacked in here, where these are all buy stop levels, if they get filled, then my stop loss is back. It's really back below that dollar move. So if I start getting stacked in orders, my stop loss is going to be down here around 3,800. But if we're open space, pulling back, open space, pulling back, you know, this is just a measured breakout towards 1.45. Okay. And again, I might not get filled on a single buy stop order. And here's what I would watch for in the dollar CAD. If this is up, just to kind of, you know, test those highs again, if we go up here and then we fade all the way back down, you know, we could be putting in a top on the dollar CAD. There's obviously resistance here. So if I get a topping pattern, that's a low risk, high reward type setup. If we're going to go all the way back down to support, I just don't know if the Canadian economy is looking that much stronger than the U.S. economy. I don't know if oil is going to hold the lows. If oil breaks the lows, I think the CAD gets weaker. So I am looking at long positions on dollar CAD with a multi-year breakout. Does it matter who your brokerage is? No. Doesn't matter as you can place trades. What price would you buy MicroStrategy? I mean, if I want to buy some shares, I'd say minimum 200. Or I guess maximum. I don't want to buy it at all-time highs. So we're sitting here at 250 right now. I've just got a bunch of ratio spreads on MicroStrategy. I'm just waiting. But yeah, if we get a pullback towards like $200, right there would be at least one spot to do it. So I put in some dollar cost average levels in my Pulver alerts. I did like a 200, 175, 150. If they come back and get filled, great. If they don't, well, I guess I'm just going to make some money on income trades. Coinbase, we're up to 235 right now. Let's see what this one's trading for. I want to take a look. This is out to January. Coinbase. So a 220 by 230, currently showing about $114 profit. My trade was, actually, I don't mind taking the profit here. So 29.23 minus 25.52. I paid 371 for a max profit of 629. Let's see. I mean, I think Coinbase can go higher, but I also don't mind just taking some profit. I don't know. It's probably fine. I guess my concern would be this: if we end up, you know, fading and filling this gap. I mean, we've had earnings already, but I could see price. I don't know. I think we go higher. If Coinbase goes higher, my max profit would be about $6 and change. What's my calculator? So my max profit's 629. Let's say that I hit like a 50% take profit. Well, if I'm making over $300 on the trade, I think I'll be happy. So I'll let that marinate a little bit longer. I only need my break even on the price is 223.72. So my break even is 223.72. And we're trading up to 235. So if price goes higher, then this looks even better, and the expected move would be well beyond this. And so we can probably close out for, if I close this for like a, let's say $6.50 credit or a $7 credit, instead of waiting all the way for $10 max, I'll probably just take like, I'm good with like a 50% profit here. So I'll keep an eye on that one. But just want to see how those kind of Bitcoin related instruments were correlating. All right. EuroCAD, sure, I'll take a look at EuroCAD and then I'll wrap it up here. Wow. Big old drop on EuroCAD. I think that's more the euro than anything else. EuroCAD and PoundCAD. Yeah, I mean, EuroCAD is just super choppy, right? Look at all this garbage, just garbage range trading. I mean, what do you do with that? I've actually been looking for a top here on the EuroCAD for months, and it's like we have it, but we just can't go anywhere. You know, So like we're sitting here at the highs and the lows, and this thing's just extremely choppy. So either you learn how to survive in that window and you trade the chop, or you look to see if this actually breaks and goes lower. If this breaks and goes lower, then measure that move, project that move out, and then you have all this support down here. So right now, if the Euro CAD were to bounce hard off the lows, then maybe it's a range trade back up to the highs. If it breaks and goes below the 200 EMA, I would just measure that move out here, target these previous lows, and try to get in with some shorter term trends to the downside back towards 146. Pound CAD is pretty similar. Pound CAD, you can just see the structure here, right? So just still doing this. I would just wait for this thing to decide that it's no longer going higher. If we break on the right-hand side of this area, take it back down towards the 200 EMA. But I like this resistance area on Pound CAD, Euro CAD. To me, both those look pretty clean. Okay. So that being said, look, good stuff today. I mean, I said this all week. If the market moves higher, life is easy. You know, so this is not a bad thing to see the market gap higher. 586.54. I hope my 585 gets hit today, because I could turn maybe a very inexpensive butterfly spread into a nice little profit. So I'm going to keep an eye on that one today. So right here, 1, 2, 3. So my 15-cent debit is trading for about 33 cents credit. And if we get closer to my 585 pin price, which is only $1.60 lower, if we make our way towards it, I want to see what this is trading for. If there's a way this is trading for 50, 60, 70 cents, I'm trying to get it close out for $1. But yeah, we'll see what happens. So a couple inexpensive butterfly spreads that might pay some good profits, maybe. And then Bitcoin, yeah, Bitcoin's hitting all-time highs. We'll see if there's momentum to the upside. November is historically one of the best months for bullishness in Bitcoin. If we're in open space, we make another push towards 75, another push towards 77.50. I would say next stop in momentum probably gets us up into the 100K mark. That's probably the that's the game theory momentum target. And one could argue like, oh, Bitcoin will be $1 million. Yeah, maybe it will be. Maybe it will be. Maybe it won't be. But it's still risk capital, and it's looking more promising now that we hit all-time highs. And I mean, it looks technically pretty good. Okay. So again, you can see this headline here: Trump's victory sends stocks soaring, commodities crashing. That is interesting. So where's oil at, by the way? Oil still hanging out there at 72.50. Crude off the lows. Natural gas off the lows. Commodities crashing. I mean, I don't know if that's really the case. Yep. Well, there's palladium crashing. Platinum down. Corn's actually hanging in there. Soybeans hanging in there. Wheat hanging in there. So I'm curious what they're, I guess gold and silver would be your crashing, because they are dropping quite a bit. Cocoa down. So yeah, gold, silver are definitely falling pretty hard. Dollar rallied hard. Stocks rallied hard. That's the market right now. Okay. All right. Last one, UPS. Are you talking about UPS like the stock? I mean, there's a gap fill here. I put in, let's see here. That trade that was a profit already. That trade's done. I mean, I think FedEx is better positioned than UPS. If I look left on the chart, let me go to a weekly time frame here. I mean, there's two spots that I look at some pretty decent support. This is one that's coming in pretty clearly, and then like $100. Like, those aren't bad spots. Now, if I check on just some simple fundamentals here, let's take a look at UPS. So price to earnings below, earnings forecasted to grow, dividends not well covered, high level of debt. It's a lot of companies right now. Profit margins are lower. Price to earnings, price to sales, not terribly expensive, below the pure average. So this is what I don't love. Current price 133, fair value 86. So if I was interested in anything on UPS, probably $100 or $80. So either $100 or $80 if I was going to reestablish positions. So until then, it's like this thing is possibly still in a downtrend. And that's it. So I don't have to do anything on it. FedEx, direct competitor, you can see a totally different price style, right? FedEx is making higher highs and higher lows. Are we going to make a higher high here? Maybe, right? Maybe we go a little bit higher on FedEx. So fundamentally, FedEx is probably slightly better. Long squeeze on the SPY. I mean, the SPY's built to go higher. So, I mean, a long squeeze, remember too, it's like we're at 586 on the SPY. 600, 6,000 on the S&P is a big milestone. So, I mean, we could still be gunning for that for the year. So this doesn't mean like this blow off gap doesn't mean it's a top necessarily. So I think as we've seen all year, path of least resistance. Path of least resistance. So if the market keeps pushing higher, gapping higher, it's trying to grind higher. All right. Okay, Zoom. I missed a trade on Zoom. ZM. So I was looking at Zoom in one of my 3 p.m. live sessions a couple weeks ago, and I was looking at just doing a bull call spread around this like $60 level. I missed it. I mean, we finally had like a really nice rounded bottom. We got above this 200 EMA around $63, and it's up $16 higher. I mean, I'm not chasing this thing. There's a big gap here around 88 to 98. So just simple technicals there. I mean, if we fill that gap or try to come back and test that gap, I could see Zoom heading there. If there's any dips or pullbacks, maybe some dips or pullbacks, you could do some out of the money income trades with options. I wouldn't mind owning shares of Zoom, but let me take a look at it real quick. The IV's probably gone down quite a bit. Yeah, we're at 62. If I went out and said, okay, by the end of the year, would I be willing to own Zoom? And if so, could I own it at $60 or less? Well, let's find out. So if I went out to December 20th and said I want to own Zoom at $60, well, that would be a sell at 60. And then I can buy the 65. Let's see. Maybe I could buy the 60 or sell the 65 and buy the 70. That's not going to be good enough. Maybe there. If I want to own it at $60, what could I do here? So put in 2 contracts. No, that's garbage. I make 12 cents credit on a ratio spread and I want to own it. I'd own it around $60 and change, like $59.88. But I'm only getting 12 cents of credit, which I don't intend to own the stock. It's just if I did own it, where would I want to own it? So not getting the premiums that I want. If I did a bull put spread, sell the 70, buy the 67.50, I get 30 cents out of a 250 risk. That's a stupid trade. So yeah, I missed it. The best trade that I could have taken would have been a bull call spread. When this thing was sitting around the 60s, I was going to do like a 60 by 65 or 60 by 62.50. So I missed it. I mean, it looks good. I don't have anything to participate in. But technically, I'd see it going up to like $88 to $90. So yeah, that's good. Trailing stops. That's perfect. That's perfect. All right, everybody. I'll let you go. Good session today. Pretty exciting stuff. Pretty wild stuff. Protect your profits. Don't be greedy. Let the markets do their thing. Don't guess tops and bottoms. Just let price do its thing. So that is the plan for the day. Let me do a quick spot check on the SPX. My trade for the morning should be. I mean, seriously, still trading for $1.90? Are you freaking kidding me? What the heck? Let's go SPX here. The whole time we've been in this session, it's been a perfectly cooperative trade. And it's trading at break even. Unfreaking believable. So there's my call side. There's my put side. Deltas are the exact same. Like, the hell, man. Give me some freaking profit. Anyway, all right. I'll see if that ends up finding my profit target here in the next maybe 45 minutes or so. Okay. Thanks, everybody. We'll see you tomorrow. Have a good rest of the day. Bye.
Attention! The Black Friday sale is happening now. You can get 40% off everything on a1trading.com, including the brand new stock box, Pulver alerts, the Edge Finder, and more. Thanks for watching today's A1 Trading Show. Make sure to subscribe and to leave a like down below if you enjoyed. If you'd like to join the show, you can become a guest with the link in the description below. That's all for today, traders. We're heading for the moon.